This is our first meeting of two this interim session or interim summer that we're going to be having MFA committees. Unfortunately, because of the situation with the pandemic, all committees had to be collapsed into two or sometimes three. But the MFA was one of the committees where we will have two committees, this one and another one, two committee meetings before the end of the year. So thank you very much for being here today and for staying connected and for just following and staying strong and resilient through this huge trial that we're all going through. Good morning to all the members. I think what I'm going to do now is have quickly, I know we started off a little late because we didn't have a quorum, so quickly I will have each member of the committee introduce themselves, please, for the public. And I'd like to state that the public will be able to watch this committee on webcast. So can we start with one of the members? I don't see them here on the, how about, let's start with Representative Alcon, my vice chair here and co-chair.
Good morning, Madam Chair, and thanks for starting with me. I'm here and ready to go.
Thank you, Representative. Who's next? I don't see them on the picture, so how about, let's see who else is here. Is Senator Ortiz-Pino here?
Good morning, Madam Chairman. Yes, I am. I'm not a voting member, but I always like to try to make these meetings when I can. It's great to see you this morning. We're actually in Dixon and taking care of business via Zoom or WebEx all week long from Dixon. Thank you. Good morning.
Wow, thank you so much. And because I can't see all the pictures lined up here, I'm going to go to Senator Richard Martinez, and then from there, just keep going is the next and next on your own, and introduce yourselves, please. Senator Martinez.
Good morning, Senator Rodriguez and Vice Chair Alcon and all the other members. I'm Senator Martinez, District 5, and this is always it's a pleasure to be here. This is my favorite committee. Thank you.
Okay, next. Who was next? All right.
Good morning, everybody. This is Representative Baldonado. Good to see everybody.
Good to see you, Representative. Thank you for being with us. Okay, who's next?
Good morning, Madam Chair. This is Representative Georgine Lewis. Good to see you.
Good morning, Representative. Thank you for being with us. Okay, keep going.
Good morning, everyone. This is Representative Andrea Romero from freezing northern Santa Fe County, and glad to be here. Thank you.
Hi, Representative. Thank you for coming, for being with us. Yeah. Okay, it came in very blurred. We couldn't hear. It's breaking up. Can you? Who is it again?
This is Senator Michael Padilla. I turned off my video. Can you hear me now?
Yes, yes. Thank you. Thank you, Senator, for joining us.
Thank you, Madam Chair.
Yes. Who's next?
Hi, everybody. This is Representative Kelly Fajardo. How's everybody doing?
Hi, Kelly. Thank you for being with us today. And I think from what I can see on the list, we probably have had each one introduce yourselves, or is there anyone that hasn't so far? If there is, please introduce yourselves now. If not, we'll move on with the agenda. And here's the staff before we go on. Staff, can you introduce yourselves for the committee and the public?
Good morning, Anthony. Excuse me. Anthony Montoya with the Council Service.
Thank you. All right. Okay, I'm Nancy, Senator Nancy Rodriguez from Santa Fe District 24, and I'm chairing and co-chairing this committee with our wonderful efficient representative, Alcon. So, okay, then we will move on. Executive Director update. Izzy Hernandez, you have the Executive Director update to enlighten us with. and good morning to all your staff.
Good morning, Madam Chair and members of the committee. It's a pleasure to be meeting with you today. Unfortunately, it is over WebEx and not in person, but hopefully we'll get to that soon. I just wanted to thank the committee for the support and helping us meet the statewide mission of providing affordable housing opportunities for all New Mexicans. As you are aware, the legislature created MFA 45 years ago, back in 1975. I'm going to go over a few accomplishments, and then I'm going to go into some of the COVID impacts at a very high level, and then we'll get started with the rest of the presentation.
Thank you.
Since our inception back in 1975, we've actually provided services and assistance to over 450,000 individuals with the various programs that we have. In 2019 alone, it was close to 20,000 individuals or families that received assistance. Not only does it have a great impact on those families, but there's also some great social and economic impacts that housing has for everybody. And it was these accomplishments are MFA relies totally on our partners to be successful. We have many partners throughout the state from corner to corner, if you will, and they are the ones that are actually doing a lot of the heavy lifting and contacting all of those clients and providing those services. So our success is their success. It was this legislature's vision to create MFA, and that led to all these families being provided assistance in the very basic need of housing. So I want to thank you for that. With regard to some of the COVID impacts at a very high level, there is a presentation later on in the agenda where Patrick and Jeff will give you more details on those programs. But with regard to homeless shelters, initially there was a very big impact and they were serving less individuals, a lot of it just because of the safety and the distancing requirements. There's been some adjustments since then in the last 6 months, and now they are serving pretty much at the same levels. And they've adapted and now are serving people in motels and not all of them in the shelters themselves. We did receive some CARES money from HUD, totaling about $12 million for the ESG program, Emergency Shelter Grant Program. And that'll help us actually expand to some areas that we hadn't previously served prior to this pandemic and cover some of those counties that hadn't been served. We anticipated early on that there would be an increased need for rental and mortgage assistance. There has been some temporary foreclosure and eviction moratoriums that have been helpful, but it's not going to help solve all the problems. The longer the pandemic continues, the more challenges we'll have in addressing the impacts that the pandemic will have in keeping families in their homes. And there's also a strain on the servicers and the property owners in meeting their obligations when they're not receiving payments. So the current economics and the housing needs highlight the need to continue to provide rental and mortgage assistance in acquiring monies to do that. MFA did launch a rental assistance program with the New Mexico Housing Trust Fund monies that were available. We set aside $3 million to do that. Unfortunately, that program is limited to providing assistance to properties that have affordability restrictions to them. And that is one of the reasons that you'll see later on in the agenda. One of our proposed legislation agenda items is to give us some more flexibility under the Housing Trust Fund Act. We were also allocated $13.3 million here recently by the CDC, the Community Development Council of CDBG funds. And those will be targeted and used for rental, mortgage, and utility assistance. I really want to thank those members of the committee and specifically Representative Romero for her assistance and helping us with that and the advocacy there. We're currently in the process of doing some program development and plan on launching the program in the mid to late October timeframe. Just want to say that we look forward to working with you in the upcoming legislative session to help us address some of the affordable housing needs. And I will say that I guess due to the only having 2 meetings, we do have very full agendas, and we've included a lot of the items and the topics that we're required to bring to the committee. And so don't have a whole lot of room to add some of the additional things that we normally do or have in the past years, but I do want to thank the committee, Madam Chair, and everybody on the committee for their support. Thank you.
Thank you, Izzy. Are you done with your part for the presentation?
I am, Madam Chair. Thank you.
Okay, thank you very much. I think what we're going to do is we're going to move on, and then we'll allow time for questions a little bit later. So let's move on to the next item, please. And that is the, you're on again, Izzy.
Yes, Madam Chair.
Reference guide overview of programs and funding at this point.
Thank you, Madam Chair. I do want to introduce a couple of the folks that will be helping me with this presentation here. Most of you know Gina Hickman. She's been with MFA for, I think, over 13 years. She's Deputy Director of Finance and Administration and has just done a wonderful job for us throughout the years. We do have a new member that some of you may not know. Her name is Donna Maestas. She should be on the call here on the WebEx. She came to us from the state taxation department. She had been there for a year or so. Before then, she was at the State Board of Finance. And then before then, she was with the New Mexico Finance Authority. A very rich background. And in the short period of time that she's been here, which is about 6 months, she's just done a tremendous job in managing that division. They'll be presenting a little bit later on, but I'll get it started here. It is the reference manual that Gina's got up. It is very lengthy, and between Gina, Donna, and I will cover it very briefly. I won't get into a whole lot of detail, but you do have it there as a reference manual, and at any point, if you have any questions for us, whether it's during this meeting or afterwards, please feel free to give us a call, and we can definitely do a deeper dive into the details. So behind tab 1, you'll see that we have a listing of all the Legislative Oversight Committee. We have a total of 16, 8 that are voting members and 8 that are advisory members. If you go behind tab 2, this is our act, the MFA Act. It has listed in there the initial purpose of the MFA from back in 1975. You may notice as you read through here that we expanded our mission in 1997, and it was codified in this act in 1998, where MFA was made or designated as the state's housing agency. That is a big highlight for MFA, in that prior to 1997, our main focus was single family and home ownership, with a little bit of multifamily. After that, when all of the housing programs that were at various state departments were transferred to MFA, that is when our mission really grew and to what it is now. And we have over 30 programs addressing the full continuum of housing. And that information is on page 12. I won't go too much more into the act there. I will go take you to tab 3. Gina, if you can go there. And this is where our rules and regulations that get approved by this committee are located. This year, we don't anticipate having any changes, so we will not be bringing that to the committee, but you do have the current rules and regs as approved and amended back in April of 2019 by this committee. Those are located behind tab 3. Behind tab 4 is our legislative agenda for last year. We had a total of 8 requests that this committee sponsored. We were successful in receiving funding for 2 of those items that were introduced. One of them is for the Housing Trust Fund that you see there. We requested $10 million and we received $1.2 million. Some of those monies are the ones that we are using to provide rental and mortgage assistance at this point. The second one is the Low Income Energy Conservation Program, which is our weatherization program, which is on the following page. I believe we had requested $2 million and we received $1 million for that program. The next tab, behind tab 5, lists all of our board members. We are very lucky and fortunate to have a very an exceptional board with a very diverse experience. Some of you may know our chair, Angel Reyes. He is a president of Sentinel Bank in Taos. He's been on our board for over 8 years and just does a tremendous job and has been a great resource and a lot of expertise coming from him. A new member, as you see there, is Mr. Derek Valdo. He's the CEO of Amaranth Risk. He is new to us. He came back to us in August of last year. They are 100% owned tribal organization and provide a lot of resources to the tribal governments, not only here in New Mexico, but around the nation. The next one you all know, I don't have to say anything about our Lieutenant Governor. I will back up a little bit and say that our board is composed of 7 members, 3 of which are ex officio members, and then 4 that are appointed by the governor. So Lieutenant Governor Howie Morales is on there. Then we also have, and he attends most of our board meetings. We also have the Attorney General, Hector Valderas, on our board. And Sally Malavey is the proxy for him, and she's been on our board for a while and does a tremendous job. Then we have the State Treasurer, Tim Eichenberg, who's also been on our board for a while, a tremendous resource for us. He recently appointed a proxy in Diana Rosales Ortiz, who has been very involved and instrumental with a lot of guidance over the last few months that she's been participating. We have another new board member in Rebecca Wurzberger. She started with us back in August as well of 2019. Very rich construction background and experience and just a wealth of knowledge on the housing side. And then our last board member, fairly new, that joined us in February, March timeframe of this year is Rosalind Nguyen Chaffee. She's an attorney and works for Presbyterian Health Services and has just done a tremendous job for us as well in the few months that she's been with us. The next tab is tab 6 is our organizational chart. We've grown over the years. We currently have 84, a little over 84 employees, as we have some part-time and interns as well, but 84 employees, and we actually do plan on growing a little bit with some of our increased production that we'll mention a little bit later, and some of the growth that we're experiencing with some of these federal programs. On the right-hand side, the orange-looking section, most of that area there is overseen and supervised by Gina Hickman. And then on the left-hand side, Donna Maestas oversees most of the programs and all of the staff on that side of the organization. The next tab, which is tab 7, is our strategic plan. Our strategic plan is actually in the middle of getting revised. We plan on having a final or a new plan, if you will, in the January timeframe when our board approves. As you can see on the next slide that we may have, Gina, if you can go to our vision, mission, and core values, I think is the previous one there. So you see that, and we also have on the following page, you see that we have 5 goals. Each of those goals is supported by some objectives and some strategies. We definitely won't get into the details of those, and as I mentioned, we are in the middle of revising it, and we plan on having a new plan by the January timeframe. If you go on to the next tab, Gina, tab 8, won't go into detail on these as well, but we thought is important to kind of mention some of the myths and about MFA. The only one that I'll kind of highlight, and we do get confused quite a bit, a lot of folks think we are a state agency, and we're not a state agency. We also get confused quite a bit with the New Mexico Finance Authority. And I think that's on the next page, but that's about the only items that I'll highlight. And if you have any questions on those, we can definitely address them as well. With that, Madam Chair, I'm going to turn it over to Gina to go over the next couple of slides, and then Donna will cover a few more, and then I'll come in at the end.
Okay, thank you. Hi, Gina.
Hi, good morning, Madam Chair, members of the committee. It's great to get together and talk about MFA. You know, we are all proud of MFA, and we have a lot going on. So real quickly, this slide represents our estimated funding sources for 2020. Our estimated total is $848 million. As you can see, a big piece of that, over 64% of that, is related to private activity bond cap. Private activity bond cap is not a cash resource for us. What that does is it gives us our tax-exempt bonding authority. This resource is allocated statewide by the State Board of Finance on an annual basis. And the private purposes that this tax-exempt bond authority can be used for include bonds, tax-exempt bonds for first-time homebuyers, and also for rental development. And so you can see again, and this is an IRS allocation again that's pushed down to the State Board of Finance. Federal housing programs represent over 29% of the resources that we do have. You can see in the little boxes off to the right of the pie chart, the different affordable housing programs that we do administer from the federal perspective. If you look at the bottom, you can also see we've got some of our CARES Act money represented. As Izzy mentioned earlier, our total CARES Act money from HUD is actually about $12 million. About 1.6% of our affordable housing resources come from MFA's general fund, about 2% from the state, and then we have about 1.8% that come from private or other sources. The next piece behind, what tab are we on? Tab 10 is a summary of our audits. MFA is subject to the New Mexico State Audit Act. So we have an annual financial statement and single audit that is performed. We also have an internal audit program that is that is currently supported by REDW. This audit plan every year is developed based on a risk assessment that is put together by staff and is reported out to our board. The rest of the audits that you see on here are really programmatic in nature. Again, with the level of federal funding that we have a significant amount of audit activity that goes on at MFA. And with that, I think I'm going to pass it over to Donna to start with tab 11.
Thank you, Gina. Good morning, Madam Chair, members of the committee. Behind tab 11 is MFA's Federal Fund Program Summary for 2020. So from HUD, we received approximately $5.2 million for the home program that is used for multifamily development, commercial housing development organizations, and single-family rehabilitations. For the regular Emergency Solutions Grant, we received about $1.2 million. And from the ESG CARES Act 1 and 2 funds, we were allocated approximately $12.9 million. These funds will be used for homeless prevention, emergency shelter operations, rapid rehousing, rental, and utility assistance. Next slide, please. And for the annual housing opportunities for persons with AIDS grant, we received about $1 million, and from the HOPWA CARES Act funds, we were allocated $146,000. The eligible activities are rental assistance, permanent housing placement, supportive housing services, and homeless prevention. For the National Housing Trust Fund, we received $3 million for new construction and rehabilitation of multifamily housing. So on the next slide, please, Gina. So from the Department of Energy, we received approximately $2.5 million for homeowner energy efficiency improvements. And from the IRS, we were allocated almost $5.9 million in low-income housing tax credits that are used for new construction and rehabilitation of multifamily units. So moving on to slide 12. Or tab 12, sorry, next page. This is the list of the multifamily low-income housing tax credit awards for years 2000 to this year, 2020, by congressional district and county. So 52.4% of the awards were for projects in rural areas, and 47.6% of the awards were for projects in Bernalillo County, and the municipalities of Santa Fe, Rio Rancho, Las Cruces, Farmington, and Roswell. Next slide shows the 9% low-income housing tax credit projects in Congressional District 1. And on the next slide, it's the 4% low-income housing tax credit projects in District 1. And then on the next slide is the economic impact of the LIHTC projects in District 1. So the total revenue generated from construction was approximately $75.4 million. The induced effect of spending income and tax revenue was about $22.7 million. And the ongoing annual effect that occurs because those units were occupied is approximately $22.3 million. So the next, oh, I'm sorry. Okay, next slide, please. All right, so this is the 9% LIHTC projects in District 2. And then the next slide is the 4% LIHTC projects in District 2. And the next slide is the economic impacts of the LIHTC projects in District 2. And for the construction, the impact was approximately $75.4 million. The induced effect of spending income and tax revenue is about $22.7 million. And the economic effect from those units being occupied is approximately $22.3 million. And now we go to the next slide, which shows all those 9% LIHTC projects in District 3, followed by, on the next slide, the 4% LIHTC projects in District 3. And finally, the economic impact of the LIHTC projects in District 3. So for the total revenue generated from construction, it was approximately $91.2 million. The induced effect of spending income and tax revenue was about $27.4 million. And the ongoing annual effect from those units being occupied is approximately $27 million. So on the next slide is the estimated economic impact of all those projects for the entire state. So the total revenue from construction activity is $288 million. The effects of spending and tax revenue equals about $87 million, and the ongoing effects due to the units being occupied is $86 million for the entire state. So now we'll move on to tab 13. And this is a summary of MFA's programs. So MFA has about 30 different programs that assist low and moderate income households with mortgage loans, down payment assistance, shelters, homeless prevention, rehabilitations, home weatherization, multifamily development loans, and tax credits, just to name a few. And on the next slide, just to let you know, our success is reliant on the success of our service providers. So we offer our providers training and ongoing support, and they do a great job dispersing the money throughout the state. The next slide. There we go. Thank you. This slide shows the production data. So it is showing the number of units, not the dollar amount, of the single family home loans that MFA purchased, which is in blue. In the light yellow, the multifamily loans and bonds that closed, and the allocated tax credits that we were just talking about. And in gray, the number of units rehabilitated. This includes our home-by-home rehab program, our veterans rehab program, and the weatherization assistance program. So as you can see, the big driver is the single-family home loans, and we have had record production since 2016. Next slide, please. Okay, this shows the economic impact of MFA's programs. So the lighter blue is the economic impact of the existing single-family home sales. The darker blue, I'm sorry, okay, the darker blue is the local income generated from the new single-family home construction. The gray is the local income generated from new multifamily construction. And the yellow is the savings realized through the Housing First model for homeless, which is $6,000 per homeless person served. On the next slide, there we go. In 2019, MFA provided over $527 million in financing and grants for affordable housing and related services. And just want to say that everyone at MFA is proud of our mission and the assistance that we are able to provide to the New Mexicans. Now I'll turn it back to Izzy. Thank you.
Thank you, Donna. Madam Chair, the next one is on tab 14. There's a tremendous amount of information here, so I'll kind of fly through it and just hit a couple of highlights. I do want to give a lot of credit to Sonia and Rebecca, who will be presenting a little bit later on, for putting this assessment together. And it's fairly recent, with an update with data as of May of this year. So if you look at the page 1, it really gives you a table of contents on everything that's located within here. Has a profile of New Mexico. If we look at page 2, there's kind of talks about the urban and rural differences of the state. Page 3 has population. Page 4 talks about the economy and where our major sectors of employment are. Page 6, a couple pages down, talks about the poverty, and we have about 20% poverty in New Mexico. As a benchmark, the national poverty level is 14%, so we are definitely much higher. And I think there's only one state that is a little bit higher for us in poverty. Page 7 kind of gives you the details of where those poverty rates are within the state. You can see the McKinley County there on the far left side has the highest poverty rate in the state at 36%.
Excuse me, Izzy, Senator
Yes, ma'am.
Rodriguez here. Can you back up to the page you just passed on the poverty levels? That one there, just a few moments there, a few moments till I could look at the poverty rate level here that you said, because it went by a little fast. So, okay, great. Thank you. You can move on.
So the next page that I'll jump to, Gina, is page 17. This is just highlighting some things here. Page 17 talks about senior households. I'll wait for Gina to get there. And you can see that in New Mexico, we have about 30% of our households have seniors in them, compared to the nationwide average of 28%. So we have a higher than average senior households in New Mexico. A couple pages down on page 20, talks about the homeowners and renters. We have a very high homeownership rate of about 67% compared to the national average of 63.8%. A couple of pages down, page 22. Part of our the reason for our homeownership rate being as high as it is, a big component of that is people that live in manufactured or mobile homes. New Mexico has 16% of our housing stock and homeownership is in manufactured housing versus a little over 5% nationwide. So that is a very, very big difference for New Mexico. Page 35, several pages down, we go into cost burden. This is a big challenge for New Mexico and MFA is we have about 21% of folks are cost burdened, which means that they're paying more than 30% of their income towards housing, and a close to 10% of that is folks that are very or highly cost burdened, which is about 9% of that, and that means that they're paying about 50% or more of their income towards housing. Big challenge there. Page 48. This is something new that was added to our housing needs assessment. It was an area on homelessness. You may have heard about this several months back that based on a HUD study that was done in 2019, New Mexico had the highest increase in homelessness from all the other states at a 27% increase. And there's a lot more information in the slides that follow with regard to homelessness. Jumping down to page 54, this talks about the housing needs and rental units needed by county and by region. So Gina, if you go down to page 57, it gives you a good indication here for the entire state. If you add all of those up, it gives you the amount of rental housing units that are estimated that are in need. And out of those, how many people qualify for down payment assistance, which also leads to the need for additional monies to provide that assistance as well. I know that went through that pretty fast, but those are some of the highlights of the housing needs assessment. And I would encourage each of you to, when you have some time, to take a look at some of those details there. And if you have any questions, you can definitely reach out to us. The last tab that you have here under this reference manual just has the glossary of terms. We tend to use a lot of different terminology here at MFA. When we're presenting, we try to spell things out and be a little more descriptive, but in case we miss it, sometimes there is a glossary here, and then also the behind or a little bit further back is also a list of all the acronyms. Madam Chair, that concludes our brief presentation of the very extensive reference manual, but we're open and available for any questions you or the committee may have for us.
Okay, thank you. Now, was Donna Maestas going to say anything or make a presentation from her end?
Madam Chair, she did cover a few of the tabs there, so I don't believe she has anything further unless there's any questions you or the committee members may have.
Okay, thank you. I just didn't know if she had anything else to offer. Thank you all very much. What I'm going to do is, before we move on to the next item, so we don't have too much information crammed here before questions, I'm going to just allow for questions at this point, and we'll move on to the other agenda items. So, any questions from the committee on these two items that were presented? Okay, thank you. Okay, Senator Ortiz-Pino, you have a question?
Oh, shoot.
Thank you, Madam Chairman, and lots of incredible information, Izzy and Gina and everybody, Donna and everybody that gave it. Thank you for that. My question really had to do with one aspect of all the information you provided, and that is the federal money that's available now for eviction and foreclosure prevention. What is the plan for how that's going to be used, and is it anywhere near enough to meet the need?
Madam Chair and Senator Ortiz-Pino, I'll take a stab at answering that question, and then I may need a little bit of help from Rebecca as well. So the money that we received from the Colonias the Community Development Council, the CDBG funds, $3.3 million. We have projections that the need would exceed that amount of money available. There are some projections, and these are worst case scenario type projections with a lot of different variables to include when the economy opens back up and the unemployment rate and those type of things, and whether there's enhanced unemployment benefits or not. But the worst case scenario was over $200 million needed. The 13.3 is a significant amount of money, but we don't think it'll meet all of the demand once it's up and running. The intent is to definitely use it for rental and mortgage assistance. Part of the requirements from the Community Development Council was that they wanted to make sure that there was good dispersion of the funds and that it was available statewide. So they asked that we set aside a minimum of $1 million for each of the COG regions for a 120-day period. Once that 120-day period is gone, if money is not used in a particular region because there's not the need or the demand there, then it can be consolidated and be used in other regions where there's a higher demand. The intent is to initially use it for a maximum of 3 months worth of rent or mortgage assistance and utility assistance. However, the CDBG regulations do allow up to 6 months. So if there's not sufficient demand in some areas of the state or the money isn't going out the door, which will be hard to believe, then we could extend benefits up to 6 months versus just the 3 months. Those are some of the highlights. I did mention earlier, I believe, that we plan on launching that program in the middle to late October timeframe to make some payments, if you will, for November. There is a lot of things that we're trying to gather right now, the program development, getting a software system that'll help us manage all that, all of the applications and the reporting to DFA and to HUD, and the marketing to make sure that the word gets out to everybody around the state. So those are some of the key things. Rebecca, please feel free to pipe in if I missed any highlights that you want to include.
Madam Chair, Senator Ortiz-Pino, I think Izzy covered it wonderfully, but I'm here for questions if you have any additional ones.
Okay, so Madam Chairman, is the plan to just first come, first serve, the first one's lined up, we'll get the money, or is there some effort at assessing the level of need and will the money go to the landlord or to the tenant to pay the land? How is that all going to be handled?
Madam Chair, Senator Ortiz-Pino, we are still developing the program right now, and we would need to take it through our board and our policy committee to get final approval. We are looking at some preferences, but we're still evaluating how that would work. The preferences we're looking at are based on need. And then, of course, as Izzy mentioned, for the beginning of the program, we are going to allocate $1 million to each COG as requested by the CDC at the Department of Finance and Administration. In terms of where the payments will go, the actual applicant, the tenant, would file the application and provide the documentation. The landlord would have to confirm the documentation, and the payment would go from MFA to the landlord.
And is there any protection, Madam Chairman and Rebecca, any protection against a landlord let's say there's 8 months of back rent owed. By the time this finally starts clearing up, there may be as much as 8 or even more months of back rent owed. The moratorium has prevented eviction, but when the money finally flows, maybe it's only enough for, as you said, they've limited it to 3 months. Is there any protection that the landlord will get the 3 months and still evict the people?
Madam Chair, Senator Ortiz-Pino, that is a big issue that's being looked at nationally. I know HUD, who is the grantor of these funds, is going to be coming out with guidance on how to handle that situation. We are also talking about how to handle it internally as well. Some of the talks have been negotiating with the landlord as part of giving the assistance, but we do not have quite a firm policy at this time. But we are aware of the issue, and we want to make sure that when we give funding, it is keeping people in their homes.
Great. Okay, well, thank you, Rebecca and Izzy, and thank you, Madam Chairman. I'm really frightened at the gap between the need and the available resources, and it's something that we're going to have to deal with if the Congress doesn't come up with more money. we're going to have to do something at the state level. So we ought to keep this in mind for a possible legislative request. Thank you, Madam Chairman.
Yes, thank you. Thank you, Senator Ortiz-Pino, and I fully agree with you. Perhaps, Rebecca, at the next meeting, you may be able to have some updated information for us on the policy for the distribution of this money and the issues that were raised by Senator Ortiz-Pino. I know the need is much greater than the amount of resources that we have, and that was one of the questions I was going to ask is what's the criteria for distribution of these funds, considering that the need currently is not being met. And so I think you've done a great job in giving us the information that you have currently, and you're still working on some additional policies that you will present to your board, you said, and we would appreciate any update you can give us on that at the next meeting. Thank you very much. And anyone else that has questions, I don't see anyone on my list here, but I do have.
Madam Chair, Senator Padilla, I do have a question.
Okay, thank you. Senator, please proceed.
I apologize, I just got into the wire. Thank you, Madam Chair. I just wanted to follow on with Senator Ortiz-Pino and your comments, Madam Chair, and both you and Senator Ortiz-Pino and you, Madam Chair, and many members of this committee, just the years and years of providing housing to people. And boy, wouldn't it just be a horrendous thing if all of a sudden we wound up, with folks being displaced and this and that. So I think Senator Ortiz-Pino, Madam Chair, said it right. Want to make sure that we have a plan here. Other things that the state did, that our state did, and the federal government, I guess, rapidly. You are much like some of the other CARES monies, small business monies and grants that came here and there. If you were a larger corporation, you probably had, a battery of 60 attorneys to go scoop up in 12 seconds, millions, in some cases, hundreds of millions of dollars out of those monies. And the person that's trying to keep a roof over their head, they don't have 60 attorneys to go and represent them this way and get this thing done. And a lot of times it may be the first time, Madam Chair, that they're navigating government and navigating things and trying to get things done for themselves. So I ask MFA, Izzy, and Mr. Morfit and the company, whenever you do decide to move forward on this, you collect applications first and then close applications, if you will, and then decide where these monies are going to go. I think if it's first in, first out, first served, you're going to see larger it's going to go to the landlord. You're going to see the larger ones be able to scoop those monies up a lot quicker. So I would just recommend that they start collection of applications for a period of time and then close the applications and then make some decisions instead of just having things first in, first out. We had a program here in New Mexico that it was almost as though a group of people already knew this money was going to become available, so the money was gone within a couple of hours, from what I understand. I don't know how accurate that is, but I would hate to see that happen here as well. Madam Chair, I'm sorry to go on for so long, but this is obviously an issue that's very near and dear to me with the way that I grew up and some of the travels and travails my sisters and I had growing up and having a roof over our head. And thankfully, I was the youngest, so we all worked, but they put a roof over my head for all of those years, when I was a child, and I was very lucky that way, but not everybody is. So I just wanted to make that mention, and thank you very much for allowing me the time.
Thank you very much, Senator Padilla, and I can see your passion has truly made you a very effective senator. I recall from way back when you were initiating the foreclosure issue that we had a few years ago, and so I want to thank you for that. Does anyone want to respond from the MFA? Izzy, Gina, anyone to Senator Padilla's comments at this point?
Thank you, Madam Chair. No, we'll definitely take some very good feedback and comments, and we'll take all that into account as we're developing the program. Thank you, Madam Chair.
Okay, thank you very much.
I appreciate that, Madam Chair. Thank you.
Whoops, sorry, somebody talking here? Let's see. Senator Padilla, do you want to say any more?
No, Madam Chair, I was simply just saying thank you to Izzy. I think that's very, thoughtful, and I appreciate, Madam Chair, you allowing us to have this part of the debate.
Thank you, Senator. All right, we have Representative William Stapleton. Hi, Representative.
My question.
Yes, proceed.
Is in regards to, can you hear me?
Very little, Representative. It's coming in a little bit garbled, but let's see. Let's try again. See what happens.
Okay, can you hear me now?
Yes, much better. Thank you.
Thank you, Madam Chair. My question is regard to the homelessness, and I wanted to ask Mr. Hernandez in regards to Albuquerque. It seems to be has a major increase in homelessness in all over Albuquerque, but specifically my question is related to the International District. And so in terms of services and support that comes in from the federal government or city and counties, has NMFA received any type of funding to help regards to the homelessness, especially in the International District?
Madam Chair, I'm sorry, Representative Stapleton, we have received some funding from HUD, a little over $12 million under the Emergency Shelter Grant Program that was received, and we've actually allocated $4 million of that to our providers around the state. We're looking at allocating the additional $8 million here to the providers within the next month or so. One of the challenges is that these providers that we have are pretty much at capacity with the funding that they have. I will also mention that the city of Albuquerque gets funding as well for the homelessness, so we are coordinating with them. And there are shelters that are providing services here and rental assistance in Albuquerque. I couldn't tell you specifically how much of that is going to the International District, but I could check with our staff and get back with you with some details for that specific area of the city of Albuquerque and how many services are being provided there.
I would appreciate it very much, because I do have individuals who consider themselves providers with different programs calling me or emailing me in regards to the fact that there are no vouchers available that they can provide to our constituents who are homeless, and most of them, and a lot of them are with children. The major concern I've been getting is that the children are home, they have no place, they've been given a computer, but then they don't have anywhere to hook it up, to plug it up, to. So I'll wait for a response from you.
Yes, Representative Stapleton, we will definitely get back with you on some more details on the funding here in Albuquerque and that specific area. Thank you.
Thank you.
Thank you, Representative Cheryl Williams Stapleton. And if you can just put your hand down from the participants list so that we do not call on you twice and you don't have other questions. Thank you, Representative. All right. Anyone else for questions here before I ask a couple on my end here? Okay, thank you very much. I do have just a couple of questions, Izzy, before we move on to the next item. The I think it was $12.9 million from the CARES Act. Tell me a little bit more, how much of that is going to go into helping people directly, homelessness, and also with rental assistance, for example? What percentage or the amount? I know Gina was displaying it very nicely, but I can't recall the amount for that breakdown.
Madam Chair, thank you. That is the ESG or funds that came from HUD for homelessness. There are two major activities under it. One of them is for providing operations money to the actual shelters so that the shelters can operate and serve the individuals. The second major activity is rental assistance for rapid rehousing, so providing vouchers, if you will, or paying for rent. I do not have off the top of my head a breakdown on how much is going for shelters and how much is going for rental. We can definitely follow up and get you that information. There is a small portion of funding that is also used for administrative purposes that MFA gets. It's up to 10%, but that has to be fully justified, and any funds that aren't used there for administration will be put back into the programs.
I see.
Those
Okay.
other two activities.
All right. So basically, it seems like what you're telling me is the majority of the funding goes for the two purposes, which is for homelessness and also for rental assistance.
That is correct, Madam Chair.
Okay, so you distribute the funding, for example, for homelessness, you send it to, for example, LifeLink, right? And then they themselves provide those services.
That is correct, Madam Chair. LifeLink is a great partner. They do a great job, and we have about 25 to 30 shelters around the state that are doing similar types of services, whether it's shelter operations or rental assistance.
Okay, great. Thank you very much. And, I'm happy that you're going to look at changes to the Housing Trust Fund. I will sponsor the bill, as I do every year, for the Housing Trust Fund this year. But I'm happy that we're going to have some amendments in there to make it more flexible. We should not have barriers anywhere if we can help it at this point. There are some laws that have been there for a long time and provisions that need to be revisited. And in this case, no one would have ever anticipated what happened now with this pandemic. And so we need to change the language to allow the MFA to be able to distribute some of the housing trust funds that are allocated to those areas that have the greatest needs and have more flexibility to do more for people. So I will be sponsoring those amendments to the Housing Trust Fund, and the trust fund, as always, be the sponsor. Now, there is one point I wanted to make. I'm very happy that you elaborated, at least briefly, on the establishment of the MFA. And I'm glad to see that the MFA is pretty much self-sustaining since its initial establishment. And you are a quasi, as we know, a quasi-governmental entity or agency that really does not depend on state funding for your sustenance. But because of the programs that we have, like weatherization and the Senator Martinez sponsors and other programs, SMART program and several others that we have, we have some great connection with the state, and that's very good. So anyway, and I'm also happy to hear that you have, if I heard it correctly, you have helped approximately 450,000 people since the MFA was first established. Is that the correct number, Izzy? Did I hear you correctly?
Madam Chair, that is correct. And that is with the variety of the 30-plus programs that we have, with a good majority of those, if you will, on the homeownership side, and then on the homeless programs as well.
Okay, thank you very much. And one last question so we can move on. Tell me a little bit about this eviction moratorium. You touched on it very briefly, but if you can give us a little more information to see where that is. It was my understanding that this eviction moratorium, first at a national level, is merely a directive from the administration, and it's not a law ordering or mandating any specific enforcement. And so people would have to go to court to and take their case before a court to prevent them from being evicted. Tell me about that and what you see is going on with that. Thank you.
Madam Chair, if I may, I'm going to defer to Rebecca Velarde, who has a little bit more detailed information than I do and is a little more familiar. I think she could probably hone in a little bit more on some of the questions that you may have. Rebecca, if you're still on the line, do you mind addressing that?
Madam Chair, Izzy, yes, I'm happy to address that. So it is a little bit confusing, right, because there's been a lot of legislation and directives that have essentially been eviction moratoriums. The CARES Act provided it to people that had federal affordable housing funding. There's been moratoriums on foreclosures for FHA and Freddie and Fannie loans. And then recently the CDC issued an eviction moratorium directive. You're right, that is not a law. What's important about New Mexico, though, is that the state Supreme Court in March essentially issued a moratorium on evictions. What they did is they put a stay on non-payment evictions. Therefore, if all of the other courts listen, which is we're trying to get all the courts educated about this, if the people bring a non-payment eviction to the courts and they say, and the tenant says, I cannot pay my rent because of COVID, a COVID-related hardship, then the court is not supposed to move that eviction forward. They put a stay on it. That stay does not have a deadline at this time, and from what I've heard, there is not talk of lifting it at this time. There have been efforts by people like Representative Romero to kind of make that more of a legislative item, but currently the tenants are protected in New Mexico with the state Supreme Court action.
Okay, thank you. Do we have any provisions, Rebecca, for the impaired? For example, if people have to go to court and present their case before a judge, I don't see how somebody impaired would be able to do that as easily as someone who is not impaired. It would be hard enough for just an ordinary person going through all these trials that we're going through with this COVID. So I just wanted to see if you have anything that you do to help impaired people navigate through that.
Madam Chair, I do not believe any of the moratoriums or the stay actually talks about what to do for when somebody is impaired. However, if somebody like that, like an individual like that, were to approach MFA, we would direct them to somebody like Legal Aid or somebody else representing free legal services that would kind of work with them to represent them appropriately, and even if with their impairment, make sure that they had a viable legal defense.
Okay, thank you. I don't want to prolong this anymore. I just want to say I'm really happy to hear that you're leveraging every dollar that you have with governments, with the city and hopefully even the county to provide a comprehensive system to help with all combined resources. And so thank you very much. I don't see any other hands on the list, so we're going to move on to the next item. And that is reports on bonds issued, financing strategies, and market update. David Jones and Mina. How do you pronounce that?
It's Mina.
Mina, thank you. Chu. All right, you can proceed.
Okay, great. Thank you, Madam Chair, members of the committee. David and I are grateful for the opportunity to address you today. We work with MFA. We've worked with MFA for a number of years, helping them come to market to finance bonds, to finance first-time mortgages. But let me start with the first page. If we can go, I would like to start with a macro level and then get a little bit more specific. So U.S. GDP fell almost 33% in second quarter, the largest decline since 1947 when U.S. started keeping track with modern methods. Clearly, that was a part of the shelter in place, the decline in the service sector. And since everyone was staying at home, personal savings rose by almost 26%. We do expect the GDP to rebound back to 5% in second or third quarter of this year. But clearly, it's not as sharp a quick V as everyone had expected or hoped for. The next few bullet points really highlights the mixed messages that we're getting from the economy. The equity markets are back to their all-time highs, at least S&P and NASDAQ. The Dow is not quite there yet. And we've seen some recent volatility over the past week. And we expect to see continued volatility as we head into the election season. The good news is in the labor markets, they continue to slowly improve, not only from June to July, but we just have August numbers, which are an improvement, 8.4% in August, down from 10.2 in July. Then the bad news is the consumer confidence. Once again, deteriorated not only from June to July, but also in August as well. So now we are, for consumer confidence, down to 84%, which is the lowest since 2014. Within the mixed messages and the uncertainty of the future, the inflation continues to run below 2%, which is the target for the Fed. So we expect to see continued low rates from the Fed. Going to the next page. Okay, just as a snapshot of where New Mexico is in relation to national averages, New Mexico does not necessarily follow the national trends. Although the national unemployment rate decreased for the state of New Mexico, you actually had a sharp increase, 8.4% in June, up to 12.7 in July. And you are following the national trend in terms of increasing housing prices, just not as sharply. So moving on to the next page. In talking about interest rates, in the beginning of the year, the beginning section of the graph, this is how MFA normally operates under normal circumstances. Normal circumstances being the red line, the highest line are regular Fannie Mae mortgage rates, followed by the blue line, which are U.S. Treasury yields. And then the gray line as a percentage of U.S. Treasury yields are MMD, or municipal bond rates. So under normal circumstances, MFA borrows bonds or issues bonds at rates near the gray line, and then they set a mortgage slightly below the conventional or market mortgage rates. And the difference between what you can borrow and what you can lend at to first-time home buyers, which is still below the conventional mortgage market, is your spread. And this spread is like an annuity that earns income for MFA over the 30-year life of the mortgages. And as you can see, back when we hit the pandemic stage, back in mid-March, is when we had a dislocation in the market. And it was very difficult to issue bonds at the time, given market uncertainty. But it was the quick, decisive action of the Fed and the economic stimulus bill that brought calm back into the markets. Fed went decreased their rates down to zero, and then they started buying mortgage-backed securities in the billions. And in fact, over the past 6 months, they have bought about $1 trillion worth of MBSs, which represents about 30% of the market. So they are artificial, I don't know if it's artificially, but they are suppressing mortgage rates down to their historical low levels. So we're back in terms of mortgage rates still being able to finance bonds cost effectively, but there's so much rate compression. All the rates are so low, it's really hard to make a huge impact in terms of first-time home buyers. We have learned back from 2008 that when rates are so low, the barrier to entry for first-time home buyers is not lower rates, but down payment assistance. But moving on to the next page. Okay, so this is just a historical impact of where we were prior to the Great Recession in 2008 in terms of issuing bonds. And we've had a lull, and we're coming back up. And this is an example of lessons learned from the Great Recession. And MFA has done a great job in terms of diversifying their production, managing risk, and diversifying their income sources to weather the ups and downs of economic cycles and crises. David Jones will talk a little bit about the TBA program, which is the fact that not only does MFA issue bonds, I talked about the annuity, but they also have self-servicing, which helps steady the income flow. So between bonds and servicing, regardless of whether you make a single loan in the next 6 months, you still have a steady source of income that provides some stability. And then in addition to financing loans through bonds, MFA has another program that provides, you're basically selling loans up front. And David will talk a little bit more about that. And moving on, so specifically, we talked about bond issuances. Your underwriters are RBC and Raymond James, and we are supported by a selling group that helps sell your bonds. And if you take a look down below, here are the historical single-family bond issuances. Not all new money, some of it is refunding, but if you take a look, it kind of follows the national trend of last year was a banner year, but with rate compression, there's a little bit of a slowdown on the bonds, but it is complemented by your other ways of financing or continuing your loan production. MMFA does expect to be in the market in a couple of weeks with another $55 million of bond issuance for your production. So, moving on to the next page. So in addition to MFA, here is a list of other issuers in the state of New Mexico. Once again, we talked about the comeback of the bonds. We had a little bit of a slowdown or major dislocation in March and April. But if you kind of annualize where you are currently with 1.5 billion, we do expect not quite 2019 levels, but because interest rates are so low, we do expect somewhere near the 2018, 2017 levels. So moving on to the next page. So these are some of the economic stimulus that we talked about that brought stability into the financial markets. And specifically, the CARES Act, we talked, or Izzy, Gina, and Donna talked about all the emergency funds and funds that were available. But there's a continued need. There's the moratorium and the forbearance that helps the renters as well as the homeowners, but it does also affect MFA on the servicing side because they have to make up the difference. And so we are anxiously waiting for phase 4, which is in the middle of negotiations. And so we hope for additional funding for all the great programs that MFA is currently working on, the 30 plus that were talked about earlier. And with that, I just kind of raced through it. I'm going to turn it over to David for his presentation, and then I'll be available for questions afterwards.
Thank you, Nina. David, you want to be next?
Yes, thank you. Good morning, Madam Chair and members of the committee. Appreciate the opportunity to speak. So I'm with CSG Advisors, the MFA's municipal financial advisor. So work along with Mina and other parties in how to best finance MFA's production. I'm going to talk and try to move quickly as well, but share some of the trends and challenges we've seen this year for housing finance agencies in general. Talk a little bit about the resources and funding strategies that MFA has successfully executed the last year plus, and then a little bit more about what we see going forward. On the slide before you, some of the trends we've seen, to much of our surprise, is continued strong loan production. You know, in March and April, when COVID was obviously coming across to the states, all of us in the homeownership industry thought, this is going to be crushing in terms of demand for homeownership and even borrowers' ability to get credit approved. And actually, really, the reverse has happened. There's been the borrowers that can get approved. There's more of them, and there's probably more demand for housing and home ownership than certainly in recent years. And so MFA has also seen its production be very, very stable and even larger than the prior year. Also, as Mina pointed out, just record low mortgage rates. I think there was another low in mortgage rates set last week or earlier this week, seeing, potentially rates in the 2s and low 3s, depending on the borrower type and the length of the loan. As Mina said, the Federal Reserve continues to purchase significant volumes of mortgage-backed securities each month and providing stability to the market and lower rates. MFA's 30-year FHA mortgage rate right now is a 3% rate for its first home borrowers. Just to give you a sense of how that stands to the past, of looking back this morning, in the middle of 2019, its FHA first home rate was 4.75%, and even early this year, it was in the high 3s. So certainly that's taking down some of the cost of homeownership to its borrowers, which is supporting low to moderate income homeownership. It is challenging, though, with low interest rates. It's challenged MFA and other HFAs just in terms of generating lower interest income on its investments that it holds on its balance sheet. So that's one of the challenges we're seeing now. On the next slide, this one, and this could probably summarize a lot of what we're going to speak about today, just the shutdown, the mandated shutdowns and economic disruption from COVID have increased loan delinquencies and required payment forbearance on behalf of borrowers, like we've discussed, and as Rebecca walked through earlier. There was a lot of concern about that when that first came out in March and April, and there's still concern and a lot of management having to be done because of that. But in large swaths of housing finance agencies, that revenue disruption looks to be manageable. HFAs in large part, including MFA, are fairly strong and have kind of built their ability to withstand something like this. So that's the positive side. I will point out just the last bullet here that HFAs that service loans like MFA need ample liquidity to meet those cash needs over time. They're having to pay those borrowers on federally government-backed mortgage loans on behalf of those borrowers, and that's a significant amount of cash needed. I know Gina and her team and finance and servicing have sharpened even their forecasts and software to forecast liquidity in order to provide those advances that are needed, and they're in a very good position to continue to do so. But that's been certainly a challenge at the housing industry. I don't know if anyone ever dreamed that something like that could happen at this scale, but it's taken a lot of work to understand those requirements. So here, just talking about just overview of how MFA funds its affordable housing single-family loans, and there's a couple of different ways it does that. Mina talked a little bit about the process of issuing. First, there's tax-exempt bonds that MFA can go out and borrow and then use those proceeds to fund its production. Historically, that's provided a very low rate cost of funds to HFAs. We'll show a little bit more slides of how that's broken out over the last year. The second option is packaging its loans into mortgage-backed securities and selling the loans. That's via the TBA market, we call it. And then really, it's a sale of an asset, and so MFA takes an immediate income from doing that. It provides MFA some funds to make for down payment assistance and other needs of the authority. Also, just the down payment assistance that MFA offers through its Housing Opportunity Fund, or HOF, is really critical for low to moderate income home buyers. We've learned that down payment assistance is often the missing link for a family or individual being able to qualify for a loan. So that's been significant for its borrowers. You can see that second bullet, how much the amount of down payment assistance that MFA has funded has continued to grow each of the last fiscal years, 13 million up to almost 15, and now I think when we looked at this a few weeks ago, likely over 17 million in 2020. And so that, that's a significant contribution or dedication of resources to do that, but it's been a large part of why it's been so successful in its homeownership program. And then lastly, it was awarded some capital magnet fund monies a couple of years ago for additional down payment assistance to borrowers at 80% of AMI or below. I think those funds are largely expended, but that was a big win for MFA in the state to increase down payment assistance. This slide shows the amount of single-family production or loan activity over the last 7 to 8 years by fiscal year. And what's fascinating is just where MFA's come from just 6, 7, 8 years ago in terms of production to a huge step back in 2016, and then just built on that growth the last 3 years. You can see the last 3 years just continuing to come between 400 and 450 million, even under a lot of changing financial situations. What this slide also shows is the amount of that production that was funded either by bonds in green or by TBA funding in blue. And that's, again, just the sale of the mortgage-backed security. And really the takeaway here is that every day and even every week, MFA is reviewing interest rates. We're helping them look at which market provides the best opportunity for MFA, for its borrowers, for lower loan rates, whether that's selling the MBS or financing with bonds. And so you can see in 2016 and 17 that those were largely done via TBA or MBS sales. And then in 2019, that started to flip, where bonds were providing the most attractive borrowing rates and loan rates. So this is very active in terms of how they go about how to fund their program. So the result to MFA, this slide shows that by doing this dual funding execution, that they can generate a mix of different revenue streams. So on the left is in blue are the annual amounts of revenue or income generated from TBA or MBS sales. So these are kind of one-time cash revenue from those sales. And it is when they've done more TBA, they've had more revenue from that program. On the right is in green are the annuity streams that have been generated from issuing bonds and putting assets on its balance sheet. And again, as Mina said, those are assets that even if MFA doesn't do another loan in the next 6 months or year, these revenue streams will continue to come in to support operations, down payment assistance, or otherwise. So this mix of immediate income and ongoing revenue streams really provides kind of a rich way to continue to finance and produce revenue for the authority. This slide just simply speaks to what I said earlier about how active MFA is in monitoring interest rates, and that's crucial just to, again, providing lowest rates for borrowers and deciding which funding method to move down to move with. But this slide is a synopsis of how the rating agencies see MFA. In June of 2020, Moody's Investor Service affirmed MFA's issuer credit rating with a AA3 and stable outlook. So AA is the second highest category behind AAA that an issuer can have, and MFA's been at that level for years now. I'll just mention some of the strengths noted, which include, high asset to debt ratio, a high quality of MFA's assets, low risk debt profile, no variable rate debt, a well-established risk management policies, and lastly, sound oversight and management. The only credit challenge referenced was lower profitability compared to its rating peers. However, they quote that they expect that trend to reverse, and we've actually seen that trend reverse as MFA's built its balance sheet back up and continue to sell into the MBS market. So just finally, in closing, just again, some of the challenges we've seen, obviously the strains from forbearance and servicer advances has been drastic. We'll see how this goes now that some of the federal support is less going forward, and but MFA's certainly been analyzing where it is to be able to support that important market and its borrowers through this whole cycle. Low interest rates provide a challenge. However, on the flip side, it is bringing more borrowers potentially to homeownership, which is a positive. The regulatory environment, the GSEs, has been certainly evolving. This administration clearly wants to get them out of conservatorship as quickly as possible. Whether the election changes, what that looks like going forward will be seen. But that's been a relationship that's evolving and kind of has a lot of the industry in question on what that will look like in the future. And again, lastly, affordable housing supply, just the supply of housing stock has been challenging at these lower to moderate income and purchase price levels. That continues to remain the case. But opportunities from here, I think MFAs continue to generate a high percentage of the market in New Mexico and be a leader in the mortgage market. And, again, the resiliency of having several techniques to finance its programs and the ability to refinance higher rate bonds to lower rates are some of the opportunities we're helping MFA explore in this environment. But that's our presentation. Happy to answer any questions from the committee, if any.
Thank you very much for your presentation, David. I'm trying to get to the chat screen here and to my notes. Are there any questions from the committee on this item? I don't see hands, but I'm trying to navigate through this. Okay. Just give me a minute here. It's just not going, it's not taking it out of collapse here. So, okay, let me scroll down. Give me a moment. Okay, Rod Montoya, you have a question on this. Can you proceed, please?
Yes. So, Dave, Madam Chair, and David, I know, and I joined late, so this may have been a topic already, but I understand that a new software or new hardware or some sort of program is in place now that was just introduced, and I understand that the kind of the delay time with MFA has increased just a little bit on getting information back to lenders. Is there an expected time as to when that you think that will be fully integrated and that response time from MFA will be down?
Madam Chair and Representative Montoya, this is Gina, and I'm happy to talk a little bit about your question. So yes, MFA has been in the process of implementing a new loan origination system. The process started a couple of years ago. The system that we have had for many years is extremely antiquated. And so made the decision to make the change, move to, a more modern process that fits our lenders and will eventually provide our lenders more efficiency. At this point, Representative, we are just now going, making the transition, but we also have loans in our other, systems pipeline. So we're going to be managing two systems for a period of time, probably 2 to 3 months. We're in the process of getting all of our lenders trained and transitioned. And so any glitches associated with this transition, I would say in the next, 3 to 6 months will be resolved and we'll kind of be back to business as usual. As far as our turnaround times, yes, and it kind of, a lot of it ties back to what David just mentioned in regards to record production and, dealing with, the software implementation on top of it. Our goal is 3-day turnaround. There have been periods of time over the summer. It's kind of peaks and valleys, right, as far as how the reservations come in. For instance, this past Wednesday, we had a $7 million day. When you have, a huge influx of reservations at one time, it just creates delays in the process. We are, however, looking at potentially outsourcing some of that underwriting work as we have these, significant periods, these times where we have significant increases in the reservations and existing staff is unable to continue with those 3-day turnarounds. And I know there have been times over the summer where we've been at 5 days, and we do understand the negative impacts of that. And so it's something that we're always working on, we're always aware of. But in the long run, the new lender origination system is going to be good for everybody.
No, that's good. Madam Chair and Gina, I appreciate that. Yes, anything that's going to make it better in the future is always going to be a bit of a time of adjustment, but it does, it's an interesting time in the real estate market as well, because homes are selling like crazy right now.
Yes.
Who would have thought during a time of, it's unexpected to everyone, but there are a record number of deals taking place right now, and I would imagine your percentage of those, if the percentage remains the same, then your volume's got to be going up as well. So that would be helpful if you guys were able to maybe get some subcontract some of that work if you could, because I have heard and to be honest, I think some of the realtors probably need to expand their time in general, because everybody's getting an influx of deals. I don't know how much longer this can last. Inventories are dropping like crazy,
right?
As far as the homes on the market, but what's out there is selling. So I had heard that, and I thought that I'd have a chance to ask that question today. So thank you, Madam Chair. Thank you, Gina, for your answer.
Of course.
Thank you very much, Representative Rod Montoya. And I have, let's see, no one else on my list for questions on this item. So thank you very much, David, and we're going to move on to the next item. That is Affordable Housing Act update. This is an item we have every year. And thank you, Rebecca and Sonia, for presenting this. You can proceed. And Rod, if you can, Representative Montoya, if you can put your hand down from the screen, please. Thank you.
Madam Chair, members of the committee, thank you for having us. As you are aware, there is an exception to the anti-donation clause in the state constitution for affordable housing. This exception is put into law through the Affordable Housing Act, which MFA oversees. I'm going to turn this over to Sonia Urao, who's our Community Relations Manager and in charge of overseeing the Affordable Housing Act for MFA. Sonia?
Hi, greetings all. So essentially, this act allows for public-private partnerships that enable local governments to put resources towards affordable housing projects. This act is pivotal in creating or permitting local level solutions to the challenges many of the state's low and moderate income residents face trying to secure affordable housing. MFA's role in this is to provide technical assistance to local governments pursuing projects under the act and oversee compliance matters. Go on to the next slide, please. Under the Act, entities that are authorized to make donations to affordable housing include the State of New Mexico, counties, municipalities, and school districts. Entities able to receive donations include public entities like housing authorities, nonprofit organizations, or private enterprises. Each of these entities, in order to receive a donation, must exist for the purpose of providing affordable housing. And donations allowable under the Act include land, an existing building, the cost of infrastructure, and the cost of acquisition for development, construction, financing, operating, or owning affordable housing. Next slide. In order for the Act has certain requirements that must be satisfied for a local government to make donations to affordable housing, which include passing enabling legislation, which is an ordinance, and also having a valid affordable housing plan. MFA reviews both these documents to make sure that the local language is in compliance and in agreement with state legislation. With these elements in place, grantees can seek local governments can seek a qualified grantee through a procurement process. An MFA supports local governments in selecting a grantee. You can go to the next slide. To date, there are 37 counties and municipalities that are eligible to donate to affordable housing, and largely in part due to capital outlay funding for Affordable Housing Act oversight, 10 local governments were able to create or update their affordable housing plans this year. To date, local governments have donated nearly $60 million to affordable housing under the Act, and this past year there were approximately $3.6 million in donation. Next slide, please. Next slide, please. A recent example of how the Affordable Housing Act empowers communities to take action on their housing needs through leveraging local resources and attracting developers is the Generations at West Mesa Apartments in Albuquerque. This development opened in February and provided 45 affordable housing units, which aimed to house grandparents, grieving grandchildren, an emerging need in the Albuquerque community. And this project was made possible because of the city's Albuquerque's commitment of local resources from its workforce housing fund that made the city a competitive applicant to win $6.5 million in highly competitive low-income housing tax credit equities. And with that, I conclude my presentation.
And Madam Chair, we are open for questions if you have any.
Thank you very much. Are there any questions before we move on to the next item? Okay, I don't see any so far. Let me say thank you so much for all this great work and your much detailed information you give us. I appreciate that very much. Let's move on to the next item. I'm trying to navigate through this thing here. Okay, we've got housing issues related to the ongoing public health crisis. And on this one here, we have Jeff Payne, Senior Director of Mortgage Operations for the MFA, and then we have Patrick Ortiz, Director of Asset Management. And I'd like to recognize Representative Andrea Romero on this item because I know she had some comments to make or questions to ask on the moratorium and the evictions, and a few other points that she wanted to mention and bring up that she had sent in an email earlier. So Representative Andrea Romero, you will be on this item, but we'll go to Jeff Payne and Patrick Ortiz first, and then we will go to you. Thank you.
Thank you, Madam Chairman and members of the committee. I've got a few, just a couple slides that are graphs, and then a couple slides for some talking. But I just wanted to update everybody on some of the impacts of COVID-19 on MFA and our servicing portfolio. This graph, although it looks like a busy graph, kind of tells a story. There's a line that goes across from left to right that shows our delinquency, our overall delinquency, starting back in August of last year and working its way to the right to July, the end of July of this year. And you can see that our delinquency had gone up seasonally in December, and then started going down. And then as the COVID outbreak started to hit in March, April, it started going up in May, June, and it continued to go up in July. Each month, the tallest bar for each month is the 30-day delinquencies. 30-day delinquencies are always the largest part of the delinquencies in our portfolio. The next line to the right, which is a red, would be the 60-day delinquencies. So you can see that trend as you move through the months. When you get to March and April, the 30-day delinquencies spike as we started seeing forbearances and mortgagers not being able to make their payments. The later delinquencies, which are the shorter lines to the right, the other colors, you see in May that second line, the 60-day delinquencies shoot up because there are a certain number of people that weren't able to make their second payment. And as you move to July, you can see that the 30-day delinquencies have gone down a little bit, but our severe and seriously delinquent borrowers have really increased. And that's just a factor of people going on forbearance and not being able to make their mortgage payments. So that it kind of is a graphic representation that you can see. The next slide is a graphic representation of our COVID-19 forbearances. So our borrowers are able to request forbearance if they've been impacted, their income or impacted in other ways and can't make their payments. And this chart shows the forbearances as they were received by month. So in the April piece of this shows all the forbearances requested in April and their status as far as delinquency. And May, June, July, so on. Then at the to the right side, there is a total, and that's the total delinquencies regardless of the month. If you look, the interesting thing is in April, over 35% of the people that were in forbearance were current on their payments, or are still current on their payments. So this is people that went on forbearance in April. Over 35% of them are current. And over 25% of them are 120 days plus delinquent, which you would expect because April was several months ago. It shows the same thing in May. Fewer people that went on forbearance in May are current, and more are at later stages of delinquency, going on to June and then July. The interesting thing, if you look at the total, is there are about 30% of our borrowers, depending on the time of the month and when we look at them, that are current. We're seeing 30 to 40% of our borrowers that have gone on COVID forbearance that are still making their payments. And others are making payments, but they may be behind a month or 2 months or something like that. I just wanted to also just talk a little bit about the options that borrowers will have once they come out of forbearance. And that is if they're behind maybe only a payment or two, they might be able to set up a repayment plan to catch up. There are, with FHA and the Fannie Mae and Freddie Mac, there are options whereby people can be brought current once they get back on the job and they have their income back. They can be brought current, and the amount of money that they owe in back payments will be added as a second lien on their home without any interest charged and with no monthly payments. And that would just be repaid when they sell the house or refinance it at a later time. People that are unable to get back to their full income may require modifications that are available whereby their interest rate might change, their monthly payment might be lowered, and the term of their loan might be extended to help them get a lower payment. The next slide is just a discussion of some of the things that influence the delinquencies that we see. One of the things that has been mentioned already is MFA. Based on our mission, and we are trying to help people that often have high debt loads, credit scores are lower, and they don't have the reserves, which is why they need the down payment assistance. We've seen borrowers report the main reasons for their delinquencies are curtailment of their income. There are a number of borrowers that were unable to contact, and others say that they have excessive obligations, and obviously they've been impacted by COVID-19. And then just the economics of the state is that our incomes are generally lower, and we have a number of borrowers, especially now in COVID, in the COVID pandemic, that are either unemployed or underemployed. And things are very conditioned on the continuation of unemployment benefits, which is something we've been watching as that has been changing over the months. The last slide that I have is just to talk about the mortgage assistance program from the standpoint of assisting people that are not renters but paying mortgages. Some of the things that we've been looking at, some of the things that the regulations require: job loss or income reduction after the pandemic was declared, owner-occupied primary residence borrowers. We're looking at being able to help seller-financed real estate contracts. These are borrowers that don't have some of the protections that mortgagors with FHA or Fannie Mae loans might have. And obviously we want to make sure that we're helping people that are in need and making sure that they are in fact late or have not been able to make payments on time. The focus of the funds that we have recently received that Izzy was talking about and Rebecca mentioned would be that homeowners that earn 80% or less of area median income would be assisted. That's a requirement. That would be based on their current income, which would be post-COVID impact. So that would include more people than previously would be impacted. And of course, those income limits vary by county throughout the state. As Izzy mentioned, the maximum that we can assist, it would be 6 months. We would probably be looking at 3 months to see if we could help more borrowers, but we would adjust that based on the demand and how much money, how far that money would go. And as has been already mentioned, the payments would be made directly to mortgage servicers. We do also have the option, if necessary, to be able to use subrecipients that could assist us with the application and review process. So with that, I'm going to turn it over to Patrick and let him discuss things on the rental side.
Thank you, Jeff.
Yes, thank you. Patrick, you're next.
Thank you. Thank you, Madam Chair and members of the committee. So I know a lot of people have had questions about the moratoriums and what's been happening with the rental side of our portfolio. So hopefully some of this might be repeat, so I apologize. Couple of things that have happened was, of course, the moratoriums were issued. The first one was through the CARES Act. Unfortunately, that was only for 120 days, which suspended the evictions. Landlords cannot evict for non-payment of rent or charge late fees or penalties. However, they still could provide evictions for any other items that were for non-payment of rent, such as criminal activity or the health and safety of residents. Once this moratorium ended for the CARES Act, owners did have 30 days to remove or evict residents. So once that was done, they had to give a notice, and within 30 days, they could file evictions. Fortunately, if you could go to the next slide, please. Fortunately, as Rebecca mentioned, the New Mexico Supreme Court put out their own notice, which was published on March 24th, which put a stay on non-payment of rent cases. Landlords, however, could begin the proceedings, and as the residents received their summons, they would request a hearing. Now, the hearings are conducted by the court either by video, telephone, or unless the parties asked to appear in person. So in order for the judges to issue a stay, the residents have to participate in a hearing and provide the judge evidence that their current status was they had the inability to pay rent. So, Madam Chair, I believe that the courts, I know you had a question about the impaired. I believe the courts have some kind of system, whether it's a video or phone call, to address anyone that could be impaired or needed that assistance during the hearings and stuff and everything. So, but again, I think that has to do with each individual court. Again, the moratorium did not affect any lease violations or crime on the property that had nothing to do with non-payment of rent. From what I understand, there's no expiration date, but from what I understand, that it would expire once the public health emergency is over. If you could go to the next slide. Now, talking with a lot of our properties in our portfolio about delinquencies and seeing how they are, surprisingly, a lot of the rent collections at the properties, and this is just MFA's portfolio, have been steady. A lot of owners and management residents are still paying their rent, and we figured some of the items that have contributed to that is that the one-time stimulus check that they got for the $1,200 helped the residents pay the rent. They were using that money. The unemployment enhancement program, where people that were laid off, furloughed because of the pandemic were getting $600 per week on top of the regular unemployment. In some cases, households' income remained the same, or because of the enhancement, it actually increased. So they were actually making more money with the enhancement of the unemployment. Residents, employers were working with households to work from home, so people were able to still keep their jobs. Owner agents were working with the residents. They started doing payment plans. They were waiving late fees. Some properties, they had rent reductions, so they had Section 8 or USDA funding. Their rents were adjusted accordingly to their income. The courts were offering mediation programs. I believe Bernalillo Metro Court offers a free mediation program to talk between tenants and landlords and work out plans for them to remain in their units. And then, of course, notification of other rental assistance programs that local, city, or state, or like MFA has provided. However, this was good up until probably about July or so, and now we're starting to see some properties starting to face trouble because as long as the COVID is still around, the numbers are starting to increase. And, there's no future stimulus checks. Unemployment enhancement, that $600 per week was terminated at the end of July, and now it might be reduced or eliminated altogether. not knowing when the businesses may open and residents may return to work. So we're starting to see probably that effect of delinquency start probably in the next few months start to go up, and more people and landlords need assistance. If you can go to the next slide. So of course, MFA has tried to be proactive, and we've gotten money from CARES Act and other programs. So the one that they've talked about is the New Mexico Housing Trust Fund. We put out a NOFA in May and made $3 million available to our MFA properties, which is approximately about 200 properties or 10,000 units that could benefit from the assistance. And then, of course, we said, depending on the need, that we could possibly get more money to help these residents and stuff and everything. We were offering at the beginning was a month-to-month, but then as time went on, we said we would go ahead and do like a 3-month assistance for them, and this was to help with their rents. Next slide, please. And the other program, of course, is CDBG, which was just announced by the Office of the Governor now in August. And this is a $13.3 million that we're trying to make available for everybody in New Mexico and to help them with the rent, mortgage, and past due utility bills. Of course, as Rebecca and everyone has talked, we are currently working on the application requirements and household eligibility to see how that is going to work. So a lot of the framework is being done now, and we hope to have that out here at the end of October, end of October. The other thing that has come out, so another moratorium did come out that was released by CDC, that was just released on Friday. They are also trying to prevent the spread of COVID, so they have put also moratorium that will expire at the end of December 31st that also is trying to protect residents from being evicted. And what they have to do, there is a declaration form that they have to fill out, and there's 6 or 7 requirements that they must meet in order for that declaration for them to qualify for that non-eviction. And actually the resident would fill that out and they would take it to the landlord and stuff. So that's another moratorium that just recently came out. With that, if anyone has questions, I know there was quite a bit of questions about this.
Thank you, Patrick, for your presentation. And so far, I don't see any questions from any of the members here. If there are any, please signify it, because I don't see it immediately on my list. But I just wanted to first say thank you to you and Jeff for your presentations and your work, but also to stress how much of a delicate balance we have to have as we proceed with all of this, because we know that tenants are having an extreme time. I can't imagine getting up in the morning and wondering whether you're going to have to go take a letter from your landlord that you are being evicted and you don't have any money even to pay the rent, let alone get gas for your car. And then make the time. You have children, for example, and you have to make the time to find a way to for someone to take care of your kids while you go to set a time frame for the hearing in court, to explain to the judge what your circumstances are, and then wait for the court to make the decision. And then during the interim, you have to collect all your paperwork and your numbers on your finances and so on. All that takes so much time, and considering the stress level that you're in already from not knowing if you're going to have a bed that next day or next week for you and your children and your family, it's a huge issue. So it creates, obviously creates even mental stress and problems in relationships at home, increases domestic violence, and just an enormous amount of problems that do exist. But the balance has to be not only with the tenants, but also with the landlords. For example, I was thinking of a landlord who merely has a little tiny small garage in the back that they had, or a structure in the back that they had remodeled into a small little apartment to rent and make a little money so that they can pay their house payment in the front. This is just a scenario that I'm visualizing. And so if they don't get their rent, then they can't make any renovations to the apartment for the family that lives there in the first place. And then they can't make their house payments, so they're in the verge of becoming homeless too. These are issues that we have to think about from a very huge global perspective as we're looking at it, to make sure that we do it all with everyone in mind. A business, for example, too, small businesses, in the state. There's some people who just have, the situation I just mentioned having to do with a landlord and this lady with children, for example. I mean, this landlord has a business, for example. Not only it's a rental business, small little business. She only has one little place she rents to make ends meet herself. And so it can put her out of that business, not only out of her home, but out of the business altogether. So it's like a huge ripple effect when you start thinking about it. But anyway, I'm going to look for any other questions. Oh, yes, we do have one now. And we have Representative Cheryl Williams-Stapleton. Representative, happy to have you.
Thank you, Madam Chair. My question is related to the $13.3 million in funds that are made available. And I know above that it talks about the MFA and Department of Finance Administration administering emergency housing assistance program. But I know the regular man on the street, the woman on the street don't go to MFA and Department of Finance. So where does the $13.3 million go to and is made available to other programs or groups of organization within the community that these people, applicants for rent and to help and past due rent, who do they go to?
Madam Chair, Representative Stapleton, if I may try to address your question. This $13.3 million is what was allocated to MFA from the Department of Finance and Administration, the CDBG funds. Our plan with that is a program that we're planning on rolling out here in the middle to end of October. We are developing a marketing plan that will consist of us having maybe some public service announcements, some printed marketing with the newspapers around the state, and also having our network of providers, service providers, the public housing authorities, and the Council of Governments, just to mention some examples of how we'll plan on getting the word out throughout the state, so that folks, we do not expect them to go to DFA, but we do plan on doing some marketing to try to reach them all. Rebecca, would you like to add anything to those details?
Madam Chair, Indy, no, I would say that that's about right. We are going to market, and we really want to get information out to our partners. We are doing the central portal to actually try to kind of make it more simple, so that people have like one place to go, one online application system, and it would make it easier for statewide marketing to do so. But we will be working very closely with our partners so that they know where to direct their clients.
Thank you. So that mean then that's between now and October? October what date? Middle of October, end of October?
Madam Chair, Representative, we are aiming for mid-October. More likely it'll be closer to the end of October is what we're looking at. We're trying to set up the program in time to make November rents.
Okay. Thank you, Madam Chair, and thank you, Rebecca and Mr. Hernandez.
You're welcome.
Thank you. Thank you very much, Representative Stapleton. Okay, I'm going to go to Representative Andrea Romero. She had a comment or question on the evictions and also on some other points. She had sent an email with some information she wanted to talk about, and we will do our best to accommodate her. I'm sorry that I know some other members wanted to have additional agenda items on this meeting, but because of the time frame and having only 2 meetings, it's impossible to accommodate everyone, but I will try my best. So let's go to Representative Andrea Romero.
Thank you, Madam Chair. I just wanted to basically talk about some of what we're doing in the interim, and I just want to thank, in particular, Rebecca Velarde, who's been instrumental in helping us navigate through basically everything that was just presented and what we're looking forward to in having this rental assistance program. Since March, Representative Angelica Rubio and I have been basically trying to figure out how it is that we get folks the relief. And during our special session, we did propose 2 pieces of legislation, including a moratorium that actually could carry some weight in our state, because currently with our eviction, even with the eviction moratorium, hundreds of people are being evicted every single month, and the New Mexico University of New Mexico School of Law is collecting data regarding those evictions currently. So we're monitoring that closely. We're also working with the Center for Law and Poverty regarding how to help folks with rental issues support. And for your constituents who are facing these issues currently, we're asking them to talk to their landlords and hopefully get a plan in place for when this fund is actually available in October, so that they have, whether it's been happening since March that they haven't been able to pay, working something out with their landlord in order to have a retroactive payment available is something that MFA can do. And additionally, the other issue is that many of these folks are not showing up to their eviction appointments. They're being evicted via Zoom. And we're hoping that we can get folks just at least the information that if they claim that they cannot make a payment, the moratorium in place should allow them to have that protection. But unfortunately, a lot of folks are getting notices and don't know how to respond. And they're unfortunately getting evicted without any means for protection. So we're just trying to really get a lot of information regarding how folks can access this oncoming fund, but also to protect themselves in place currently. The issue that we have now and have absolutely no way of really understanding what's gone on is who has been evicted and what is it that they are doing today, and something that I think Representative Rubio and I are trying to get better handle on. But what we do have and what we're going to be proposing, I think, coming up now is the legislation that we're looking to support in the future, in addition to having a remedy for being able to help folks who currently want to be able to pay their rent if they get evicted and they have funds available. We're working on that. And again, if we're still in January and we're in our pandemic, which we anticipate that being so, to have a moratorium that the governor would actually be able to sponsor so that she could enact the moratorium within the court system, which currently we can't. So we, Representative Rubio and I have been working on this since March. And again, I just wanted to extend my thanks to MFA. There's a lot more detail regarding what we're doing, but thank you for, Madam Chair, for providing the time to just kind of talk about this, because we will be putting together what we're kind of toying with right now is basically a big housing omnibus on updating a lot of our housing information. And if folks are interested too, we're now just networking the idea of having a more formalized housing department in the state that works with the MFA that basically focuses on these issues from a state perspective. So thank you, Madam Chair. Lots more details that we can talk about, but in being a better steward of everyone's time, I just want to say thanks for the few minutes to speak.
Thank you very much, Representative Romero. Do the staff have any response to that before I move on or ask members? Izzy or anyone want to respond to that?
Madam Chair, I had a question for the representative, if it's allowable by you.
Yes, go ahead.
Thank you, Madam Chair. So, Madam Chair and Representative Romero, I know this is uncommon. We don't typically ask each other questions, but thank you for indulging me. So the chair mentioned a while ago I had about 6 or 7 pieces of legislation 1 year, and boy was that a joy, on the home foreclosure issues and stuff. The reason I wanted to get your take on this is one of the things that came up at the time was when evictions are taking place, and I hope that you're considering this with the work that you and Representative Rubio are doing, that I happen to become very intimately aware of this whole thing with all of that work we did those 2-3 years. Madam Chair and Representative, I want to ensure that whatever you're coming up with doesn't allow a landlord to demonstrate somehow that they kept their home or their property or whatever available, but to get a better renter, if you will, like a better renter who they feel is less of a risk. Can you maybe, are you all thinking about that at all, and have you bounced that around at all?
Madam Chair, if I may respond,
Proceed, Representative.
Thank you, Madam Chair. Thank you, Senator Padilla. So we're looking at that even right now. I'm not certain, and this is a question that we have really for probably our federal delegation about whether or not even certain apartment associations and others that aren't covered by the HUD coverage right now that the federal programs have for the moratorium on evictions, if they do vacate or issue eviction notices to folks on their premises currently, can they get PPP funds federally to basically say there's a gap to fill there as well? We don't know that. I don't know if from a business perspective that's allowable. If it is, it's obviously abhorrent, and we need to make sure that that's not happening in New Mexico. But nevertheless, those are the sorts of things that we're trying to build into the system. And I know that Rebecca knows much about the program that will be released in October, that those are one of our major concerns, to ensure that folks that are providing retroactive funds don't just cover those funds and then get evicted following that once the payment's made. All of the sort of contingencies in that, and I'm sure Rebecca can clarify how that's being done, but moving forward too, with any sort of housing support, is just making sure that folks who are doing everything that they can to stay in place and shelter in place properly, that they're not being evicted just for strictly monetary reasons. And that's what we are looking into right now. We have heard from the apartment associations as well about the worry about the bad apples that, are also protected by this, but we know that they're a vast minority of the folks that are really seeking shelter and are in dire straits currently. So those are the folks we're trying to protect. And if Rebecca has anything to add, I would, Madam Chair, just ask her to sort of elaborate on the protections in place. But that's absolutely what we're looking into right now, Senator. Thank you for the question.
And thank you, Madam Chair. And I didn't know if Rebecca wanted to comment, but I'll just, and I know you want to keep moving, Madam Chair, but I just really wanted to make sure you were aware of this with your work, Representative. And I'm happy to help you on the Senate side. I don't want to put landlords out of business either. We need to find a creative, but when we're in an emergency, I do want to give the state the ability to help in this area. It would be devastating to see folks put out of their living situation just to find a better renter or someone that can pay that mortgage or whatever. I don't believe there are people in their hearts that are out there like that, but I think we all know that there are bad actors in every industry, and I want to help you in this way. So if you want to reach out at some point, I can give you more information on the pains and the trials and the travails that me and Senator Rodriguez and others went through that year, and we were working on all that stuff. Thank you.
Thank you very much, Senator Padilla and Representative Romero, for all your hard work, both of you. I do have Senator Martinez, who had his hand up a little bit ago. Senator, are you there?
I'm here.
Thank you, Senator. You can proceed.
And Madam Chair, I really wasn't going to say anything when this came up in the second presentation, because I had already voiced myself in another committee. But while I appreciate that everybody's trying to take care of the renters, I think that we need to not lose sight of the landlords also. We have to understand some of the nightmares that these landlords are going through, especially with COVID, because when you say that they don't know how to navigate the system, you're giving them too much credit, because a lot of these tenants do know how to navigate the system. And I know it for a fact because I was a magistrate judge for 14 years and I handled these types of cases. And people know how. And once the Supreme Court issued the order not to evict anybody, I don't think that the magistrate courts are educated, have been educated by the Supreme Court as to what they can and can't do. So no one is being evicted here in Rio Arriba in northern New Mexico that I know of. Those are the complaints that I'm getting from the landlords. And I get it also from the tenants. But the complaints are that because of the COVID and because of the order, they just stop paying their rent. They figure, well, they can't get rid of me. And they know that it'll take 6 to 12 months before they evict them. By then, they'll be out and the landlord will be stuck with 10, 12 months of unpaid rent. So we can't lose sight of that because there are a lot of people that are professionals at this. And we need to, and I agree totally with Senator Padilla that we can't force the landlords to not rent to some of these low-income people based on their income because of the past experiences that they had or they have had, especially now through COVID. So I hope that that during your bill that you're doing, Representative Romero, that you take that into consideration also. Thank you, Madam Chair, and that's it. I just needed to say that.
Okay, thank you very much, Senator Martinez. Is somebody else on the list or somebody else that wanted to say something? I still have Representative Cheryl Stapleton's hand up. Is that another question, Representative, or is that from before? Representative Cheryl Stapleton? Okay, she probably just has her hand up and didn't put it down. If you can hear me, you can put your hand down if you don't have any other questions, so I don't call on you when you've already expressed your concerns or asked the questions. Thank you. And I don't have any others as I'm looking at my list. So thank you very much for your presentations and information. Let's move on to the MFA legislative agenda, initial review. All right, Izzy, you and Rebecca, again, thank you.
Thank you, Madam Chair. This is the last item on our agenda as far as staff presentations. I mentioned earlier the 8 items that we took to the legislative session earlier this year. There were a total of 8 bills that were sponsored by this committee. This year, we are planning on this upcoming legislative session on focusing our efforts on 2 to 3 bills. We mentioned earlier the Housing Trust Fund, some funding for that, and then also some changes to the Act. So I'll let Rebecca go through those, and then I'll address the third item after Rebecca concludes with kind of highlighting some of the things with the Housing Trust Fund.
Madam Chair, members of the committee, first I want to thank each of you for your efforts to support MFA during the 2020 general session and special session. MFA successfully received $1.2 million in New Mexico Housing Trust Funds and $1 million in Low-Income Energy Conservation Program funds. MFA will utilize this funding to build and rehabilitate more affordable housing, and we could not do our job without you. You truly are wonderful affordable housing advocates. Our proposed legislative agenda for the upcoming session looks different than in previous sessions. We have received feedback that our legislative agenda is a bit long, and it makes it hard for legislators to understand our priorities. Thus, you will see we only have a couple of items on our agenda. The first item is an appropriation request for $12 million for the New Mexico Housing Trust Fund, which was also included in our Infrastructure Capital Improvements Plan. We have previously requested $10 million. As we are trying to reduce the number of bills, the dollar amount of this request includes the previous year's New Mexico Housing Trust Fund ask, in addition to the Low-Income Energy Conservation Program request. The New Mexico Housing Trust Fund was created by the legislature in 2005 with an initial appropriation of $10 million and subsequent appropriations of over $12 million. MFA has grown the fund and has awarded more than $50 million by recycling interest and principal payments. The fund has helped to construct or rehabilitate over 3,800 homes in 59 housing developments and has leveraged over $565 million in other funding. That's a 25-to-1 return on the state's investment. This appropriation could help build, rehabilitate, or preserve approximately 1,000 quality affordable homes for low-income New Mexicans and could weatherize and provide energy efficiency upgrades for up to 300 low-income households statewide. The second item on your agenda includes statutory changes to the New Mexico Housing Trust Fund Act to allow NMFA to utilize the funds for more types of housing activities, including, but not limited to, rental and mortgage assistance, down payment assistance, weatherization activities, and housing program services. Thus, New Mexico Housing Trust Fund could become more of a broad affordable housing funding source. MFA is recommending changes to the statute as, due to recent events with COVID-19, it has become very clear that state funding is desperately needed for other types of housing activities to ensure New Mexicans continually have decent, safe, and affordable housing. Though we will come to you with specific legislative changes at our next second meeting, specific language, we do not expect the changes to be very significant in order to make a big difference. We will also come to you at our next meeting to seek changes to the New Mexico Housing Trust Fund rules, which will also assist us in adding flexibility. As Izzy mentioned, I'm not going to go through the third legislative item that is currently on the agenda as we are still rethinking it, and I can let Izzy go into that, but I'm also open for questions, so thank you for your help.
Yes, Madam Chair, what I'll do is I'll cover this third one a little bit. This is one that we're reevaluating on whether we introduce legislation for this. The original intent was there's some duplication of effort with what we're doing and what HUD is doing. HUD provides the majority, if not the full compensation or funding for the regional housing authorities, and they monitor them on a very regular basis. So that was one of the first points. The second one is the reason that the regionals were that MFA was given oversight of the regionals was with a lot of the risks that they had originally when they got into some trouble with issuing bonds. Their ability to issue bonds was stripped when the legislation was changed, so that risk is gone. However, we're reassessing whether we introduce this. We don't want it to detract from our big focus, which is a housing trust fund, the two items that Rebecca just covered. So we may, we'll reevaluate it over the next month, and we may come back to the committee next month with our proposal on whether we want to introduce legislation for this or not. I know that we've had some coordination meetings with HUD, and also had some discussions with Senator Ortiz-Pino and Senator Papin at the last legislative session as well, and some comments that were made there. So we'll kind of work through that and then let the committee know next month at our second meeting whether or not we want to proceed with this. Thank you, Madam Chair. That is our presentation on this, and we're open for any questions that you may have.
Thank you very much, Izzy. I don't see any questions on my list here. Are there any, does anyone have any questions? And perhaps I don't see someone's name or hand. Okay, and I think Cheryl, Representative Stapleton still has her hand up, but that must be from the previous question. So I don't have any other questions here on my list. There is, and maybe for staff, you can clarify this for me. On the list is a lady named Karen Myers, and there's a question mark instead of a hand or any other kind of notice. Does that mean it's someone who needs to speak here before we go on to public comment, or is that under public comment? Can staff clarify that for me?
Madam Chair, I don't actually have that that notice that I see. If Madeline's there, maybe she knows what that is. I'm not quite sure.
Okay, thank you. Madeline, can you give us a little bit of information on that? I just don't want to pass that over if it's someone that wants to ask a question. But we do have public comment as the next item. So if we miss this lady now, we can move on to the next item. But let's go to Madeline first and see if you have anything to add, Madeline.
I don't have any private chats from anyone at the moment. I don't know if that helps at all. But, it looks like we actually do possibly have a question. I'll move them up to panelists so they can ask, if that's okay with you, Chair Rodriguez.
Madam Chairman, we do have public comment as the next item, Madeline. So is this a person as part of the MFA or somebody that came in as an attendee, or it doesn't, I don't have any information other than her name and a question mark by it.
Madam Chair, next to Karen Meyer's name, I have that she's with the city of Albuquerque, so I assume maybe she's here for public comment of some sort.
Okay, that's kind of what I was thinking too. It may just be under the public comment category. So let's do that. Let's go ahead and move on to the next item, and that is public comment. And if you have any other names besides this one that I have for Karen Myers, please let me see them so I can recognize the public in the public comment. Karen Myers, are you there? Are you here for public comment? I don't see, I don't hear anything. Can anyone hear something? Or are the microphones just off, or? I don't see anything else.
Karen Myers has the ability to unmute themselves if they would like to.
Thank you. Karen, are you there? Would you like to make public comment? I don't have.
I just received a Q&A from her, and yeah, and it says they would like to make public comment. Karen, I'm going to go ahead and unmute you right now.
Thank you for that. We will wait for Karen.
Madam Chair, I took my hand down. I'm sorry.
Okay, thank you, Representative. Karen, are you there for public comment? I just have the agenda on the front page here of the WebEx, so I don't have anything else on there showing. We can't hear anything on my end. Can others hear? Karen Myers?
Madam Chair, I can't hear anything. She's unmuted. She has her video on though, so I'm not sure if she's just unable to. She's pointing in her video to her headset.
I see you flashing through some different pieces of documents on the screen. So let's see if we can. Is she still on video?
Yes, Madam Chair, she's on video. She was pointing to her ear to the headphones. I'm not sure if her mic isn't able to pick it up. We have her unmuted right now.
Okay, while we're doing this and she's trying to navigate through that, do we have any others for public comment? I don't see any other names. Anthony, do you have anyone, or Madeline?
I don't have anyone else on the list, Madam Chair. I think that if Karen's still there, that there's a phone number on that how to connect page that if she was quick, she could call in, but I'm not really sure how to troubleshoot her mic to get that working.
Yeah, I think what I'm going to suggest is that Karen put her comments in writing to the MFA and to the committee, as it seems like we're unable to have her on the screen here and in the WebEx. We can wait a moment, another minute or two, and see if she can unmute her screen. And if not, then we will just, hopefully she can hear me. And I'm making the request for some written comments, and she was not able to get into the WebEx presentation.
Yes, Madam Chair. She's pointing at her phone right now, but if she's unable to connect, she can, whatever comments she wants to make, she can send them to my email.
Can you hear me now? Hello?
Yes, hi.
I'm on the phone. Hi, I'm on the phone now. Can you hear me?
Yes, we can hear you, Karen. Thank you for coming.
Oh, thank you so much. I'm sorry. was not unmuted, and I couldn't figure out how to get unmuted. Thank you, Chair, for waiting and giving me the chance to comment. May I proceed?
Yes, please proceed.
Madam Chair and members of the committee, my name is Karen Myers. I am the Director of the Consumer Financial Protection Initiative with the City of Albuquerque, and I'm here primarily because of the issues around the eviction that we're all seeing. The city has been working very closely with MFA and Housing Coalition members on eviction prevention. We are working very hard to expand rental access and focusing specifically on many of the outreach issues that you've already mentioned around how do tenants find out that there are resources available, because that is a critical issue. The city also is very integrally involved with Metropolitan Court's mediation program, which was started in response to a request from the city, from the CFPI, the program I had, to anticipate increases in evictions as a result of COVID. And I just wanted to mention a couple of things by way of clarification of some of the points that have already been raised, just to sort of complete the picture of what we're seeing. One is that what we're seeing is that even though there is a moratorium that exists for non-payment of rent, that rental leases at this point are beginning to expire. And when they expire, landlords are taking the position that even though there may be non-payment, they can evict the tenants. And I believe that in many of the courts, they are allowing this to happen. So one of the issues that both MFA and the city and this committee may be needing to address is the implication of rental termination after a tenant has been unable to pay the rent because of COVID. And so those leases are expiring and tenants are being evicted. Additionally, there was a mention made of the scope of the eviction moratorium, and it's important to know that the non-payment criteria does not require that it be COVID-related hardship. The Supreme Court order is very specific. It is just a current inability to pay rent. And so even if the reason for that inability is not specifically COVID-related, tenants can seek the protection of the moratorium. And I just think that in terms of the information we're providing to people, it's very important to be aware of that. The other point I just wanted to bring up, because it's going to be something I know that MFA will be considering, and Senator Padilla mentioned, which is the whole issue of the application process. And while I agree that we need to be thoughtful and come up with policy that takes into consideration how best to allocate these funds, the eviction process is very, very short. And if there is a process that takes a long time to determine whether or not someone's going to get rental assistance, then people will be evicted before they get the rental assistance. And I just ask that both MFA and this committee take that into consideration when they're looking at the application process and the criteria to use. I think it's a challenging issue. I think that Representative Romero has addressed the fact that perhaps legislative changes would ameliorate that, but that won't occur between now and the end of the session, obviously. Lastly, there is still a question out there, and there's a dispute about the impact of the CDC order and whether or not, how that's going to be applied throughout New Mexico by the courts, whether or not our moratorium will be the criteria applied, or whether they will look at the CDC moratorium is still an issue. Hopefully the Supreme Court will address that in the near future. But I just wanted to bring those issues and the efforts of the city to the attention, both of MFA, who already know that because I'm working with them, but also to this committee. And thank you for letting me comment, Madam Chair and committee members.
Thank you, Karen, for your comments, and very well taken. We appreciate the work you do for the city of Albuquerque and so many needy people. Thank you. I don't have any questions at all, so I want to thank you. And I don't know, members, under public comment, we usually just take the public comment and go from there. But we certainly will take everything you said into consideration. Thank you, Karen.
Thank you.
Okay. And back to the staff, we don't have any other items on the agenda right now, so I don't see any hands. Do any members have any further comments or questions to make before we move on to adjournment? I don't hear anything. It's completely blank on this end, so are you there, Anthony and staff?
Yes, Madam Chair, there are no other hands or comments that I've received on my end.
Okay, thank you. Well, I want to thank the committee, committee members and staff, MFA staff, and our own staff and the public for joining us today in this MFA meeting, and we look forward to seeing you again at the next one. Thank you once again. Be safe and healthy.
Thank you, Madam Chair. Thank you, committee members.
Have a great one, everyone. Take care.
Meeting is adjourned. Thank you.